Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Saturday, June 18th. Keep in mind there is a risk of loss when trading commodity, futures, and options. I quickly want to go through just a couple slides and share with you some of the things that we've been looking at. Most of this is going to be technical in nature, and again, the idea behind the technicals is to try to measure some of the market emotion or psychology. And anybody that's visited with me over the past few weeks, I've been mentioning I'm waiting for a pullback in prices, and as I've been saying that the market has continued to move higher on us, although a little over a week ago we did finally peak out, and over the past week we did get a nice pullback, and then Friday, of course, a bounce back higher in the market. So some of the things I was looking at why we're expecting that pullback goes down to the stochastic study down below again. Anything above this red line here indicates a market is in an overbought position, and when we get there, we tend to look for pullbacks, and likewise, anything below this red line, it looks like the market is oversold. Um, so those are the areas I was focusing on, and again, we did finally get our pullback. Traded down nicely to the 50-day moving average, which is another key technical area to be watching. And then on Friday, we got a bounce back and actually took out Thursday's low, which is kind of a bullish indication. And I guess I'm probably expecting this market to move back higher from here since we are in that oversold position. Nice sell off, so I think the bounce is in store, and probably look to continue the upward trend that's been in place now for most of 2016. Now, as we focus on the bounce and try to look for some ideas where the market takes us from here, there's something on my radar screen that goes back to July of last year, and I think it's a pretty good target. And that's this gap in the crude oil chart. And what I mean by a gap is each one of these vertical lines is a single day of trade from top to bottom. And when we open the following day higher or lower than the high or low of the previous day, it creates this gap in the chart. And the trade focuses on that and typically does not like the gaps in the chart and comes back and closes them. And it may take some time, as it has in this instance. It's been nearly a year now. But the trade typically will fill those gaps. And since we have come back so much from the low back in February to where we are today, I guess I'm expecting that uptrend to continue. And we come back and at some point fill this gap. And I don't know how soon that happens, but definitely want to keep it on our radar. And that would take a price of 56.50 on crude oil to do that. So, that would indicate another $8.50 higher we would have to go to do that. So, something that I'll definitely be keeping my eyes on. Looking at the diesel chart, same day we also have a gap. This one sits quite a bit higher. This takes us all the way up into the $1.83 range, which is about 35 cents higher than we are today. I guess I'm going to be more focused watching the crude one to get done first, and then we'll start focusing on this diesel gap. And the reason that's so much higher is because the diesel crack spreads have gone down quite a bit, which essentially means that diesel prices have dropped much more than crude, or maybe on the way up, crude's gone up much faster than what diesel has. But putting this one on the back burner for now, but something I guess we sure can be aware of. Getting back to one fundamental picture, and I guess why I think this trend continues, is continuing to watch production in the U.S. and also globally, along with this rig count number. The gold line here is our rig counts. And over the past 2 weeks of report, we have actually increased the rig count in the U.S. by 12 units. But as you can see, we've gone so far from nearly 1,600 rigs down to 337 operating as of the last report. So we have put a few more rigs to work. But the other thing that we look at, the blue line being the production chart, as we increased drill rigs back in 2009, 2010 timeframe, look at the lag until the production actually came through, and it was 18 months to 24 months, so a year and a half to 2 years to actually see an increase in production. And likewise, as drill rigs started to drop drastically here, it took about a year and a half before we seen this U.S. production start to drop. And now in just about every weekly report, we have seen a drop in production, and we are off nearly 1 million barrels a day here in the U.S. And this is happening around the world. Big production drops through Mexico, Brazil, Venezuela, Russia, and I think everybody's been hearing Nigeria in the news. And so there's been very little capital spending being done to beef up any production around the globe. And $50 oil is probably getting borderline to get some of this capital back to work, but most of what I'm hearing is the banks are going to stay clamped down pretty tight until we see crude oil hit $60 a barrel. So, not a lot of new investment coming into production, and even when that investment does come in, there's going to be a lag time before we actually see a response in production. So, from a fundamental picture, I think this just gears up to keep pushing these prices higher until we can get some capital to come in and get to work. But again, there's going to be a lag in time here. Those are my current thoughts on the market and what has taken place. And I guess with those thoughts in mind, I really like the idea of using this recent dip to get some further coverage in place if you're needing to do so. Uh, Fall diesel coverage, I think, is very interesting at this point, and also out into 2017. We've had a fair amount of interest and have written a fair amount of contracts for 2017, and I still like that idea watching the current setup. So if you want to discuss your individual situation any further, I'd be glad to have that chat with you. So feel free to give us a call. Thanks and have a great day.